Welcome to the latest episode of Index On Air. We're going to be talking about something that is top of mind for so many of our index portfolio companies and for the broader market here, which is how do you go public? This is a major topic and something when you're thinking about crossing the chasm from the private markets to the public markets. There have never been more options, more flavors, different ways of doing this, and so much to think about. So with that, I'm thrilled to have two true experts on this topic with us today. The first is Brittany Skoda, the global head of software banking at Morgan Stanley, also a dear friend who I've worked with in different capacities since my career started at Morgan Stanley about 14 years ago. And then Soleil Teubner Boughton, the chief legal officer at Hims & Hers, a digital health company that recently went the SPAC route earlier this year and has been a very successful SPAC candidate. Thank you both so much for joining us. And maybe I could kick it over first to you, Brittany, to give a little bit more background on yourself.
Yeah, absolutely. And thank you so much for having us both. It's great to be here and certainly a lot to chat about. But as you mentioned, I'm a managing director, global head of software banking here at Morgan Stanley. I joined just over 14 months ago from Workday Ventures, where I was doing early stage investing. And then prior to that, had been at another firm doing investment banking for over a decade. And so I've worked with a number of companies in the space, software, internet, like Atlassian, Tableau, Dropbox, Zendesk, many others over the years. So it's certainly exciting to be here and exciting in this market environment.
Thanks, Brittany. And Soleil, would you mind doing a quick intro?
Absolutely. And likewise, thank you for having me. It's great to meet you all and chat today. I'm Soleil Teubner Boughton. I'm the chief legal officer at Hims & Hers, which is a digital health company, as Mark mentioned. I have been a healthcare lawyer my whole career and was focused during private practice largely on representing early stage and startup digital health companies across various aspects of the space. And then ultimately went to Google for a bit and then came over to Hims & Hers about almost 2.5 years ago now. So when the company was less than a year old, had about 33 employees, I think at the time. And then, as you mentioned, we recently completed our SPAC merger and went public earlier this year in January.
What a run for you, Soleil. And I'm excited to dive into your journey, but I thought maybe we could start with Brittany. And Brittany, I think one of the things that surprised me so much about direct listings and SPACs is just how fast they've crossed from something that used to be relatively niche to something that's entirely mainstream. And to me, it's mainstream when I talk to my parents and they say, oh, what is a SPAC? So I know it's crossed into the mainstream. And so many of the people who are listening to this right now, I think would love to understand, how did we get here? How did we get to a situation where we've gone from, if you were going public, there was just the IPO to now so many different ways?
Yeah, I think it's really exciting because what it nets out as is there's just a lot more innovation in the capital markets, and there's a lot more options that different companies can pursue depending on what makes sense for them. And all of the paths can be really good paths. And so it is really looking at the individual situation and assessing and different partners. The SPAC phenomena has been incredible in the sense of there's now over $140 billion of dry capital in the SPAC market to be put to work. And that's in large part due to the significant volumes of capital that we've seen raised in 2020 and 2021. And so in 2020, we had almost 7 times that of what had been previously raised in the SPAC market in any previous year. And then in 2021, we've raised most of that volume in the first 3 months of this year. And so, we're now in this environment where there's over 300 SPACs, 140 billion of dry powder, as I mentioned. And so a lot of money to put to work. And so, I think you've seen over that time, the quality of sponsors has continued to evolve, and you have really mainstream sponsors that have SPACs and want to work with companies. And so ultimately, it just affords companies a bit more flexibility to decide, well, if I'm going public, which of these options make sense? What are the differences, and how do I think about it?
Fantastic. And Soleil, over to you. I thought a place to start here would be, first off, obviously, congrats on the extremely successful SPAC that your company's enjoyed. But I thought most interesting to our companies would be to actually go back in history a little bit and take us back to maybe the beginning of last year, maybe it was the middle of last year, whenever your team decided first to think about, hey, we're getting closer to feeling like we're ready for the public markets, and take us back to that decision and how you got from there to deciding on the direction of the SPAC.
Yeah, it's interesting when we started this process, which really, we were thinking about it earlier in the year, but it really kicked off sort of summer of last year. It was kind of on the front end of, I think, the more recent SPAC craze. I think there were a lot of companies obviously heading in around the same time as us, but at the time, there was not the level of precedent that we've seen now, certainly post 2020. And we were, at the time, a little over 2 years old. We were a company who had always, intended to go public at some point. That was kind of the long-term goal. We really felt like we were offering something that had longevity and a real demand in the market. So it was really a question just of, when and how we would do it. And I think for us, we evaluated all of the approaches, and, the SPAC really made sense for us at the time, combination of a very strong institutional investor involved, and, sort of the timing of the sort of telehealth expansion and understanding in the world. So, I think it's as Brittany mentioned, I think what's interesting now about all of these approaches is that it really can be individualized a little more for the company, and companies can choose which path is sort of best suited to where they are.
That's great. I think that personalization really speaks to the way a lot of our companies are looking at it. What is the right fit based on what sort of business you are, what sort of goals you have. Brittany, maybe back to you. I'm curious for so many of the companies that you advise, when they get to that stage of thinking about, hey, we're almost ready, and they're looking at that custom path for themselves. Like, what are some of the big, things that they might be looking for that might direct them in one path or the other? What sort of advice are you giving to folks at that stage in their journey?
Yeah, well, so there's now principally 3 different ways to get to the public markets. You have your regular way IPO, you have your direct listing, and you have your SPAC IPO. And certainly there's different processes that unfold for each one of those processes. And so depending on your ultimate objectives, and objectives could be, we want to see as many investors as possible as part of this marketing process because we don't think people understand the story, to we want to max out valuation, or we really need liquidity, or we need capital. There's different ways to tune each of these processes. And one of the things that we've seen evolve in the last several months is actually, you don't necessarily need to pick one coming out of the gate either. You can get ready, get your public readiness in place, start building out the internal processes that you might need to close the books and be able to get on quarterly earnings calls, fill out the team, take those steps for everything that you would want to do. Because the end goal, and I think sometimes people miss this, is each one of these paths, you're ultimately going to be a public company. That's not a different end state. And so getting prepared for that. And what's happening is some companies are saying, well, the SPAC called, or I'm having conversations. Maybe I'll have those conversations, but I'll also be prepared to go public if that doesn't come to fruition, or if that's not something that we decide ultimately makes sense for us. And so there's a little bit of, we used to say dual track when you would think about an IPO and maybe selling the company at once. Now there's a tri-track where you might talk to some SPACs, you might go public, you might call a couple of strategics along the way, and you'll pick ultimately the best path as those conversations really unfold for the company.
Okay, so tri-track is the new dual track. I got it. It's been a while since I've been doing this stuff.
That's right. Yeah.
I like that. Soleil, I'm curious how Hims and Hers thought about this at kind of leading into the ultimate SPAC this year. Maybe what did the process look like? Did you guys pursue that sort of multi-paths approach, which is, hey, we're ready for whatever comes at us? And I'm curious to hear, even on the tactical side, did it mean some additional hires? Did it mean certain preparedness with respect to your financial infrastructure? Maybe you can kind of talk us through the months leading up to your SPAC.
Sure, and I completely agree with Brittany. I think, ultimately you're going to be a public company. You need all of the, internal controls, all of the mechanisms, sort of everything involved in being a public company. It's just a matter of, how fast is the timeline for getting there, and sort of what mechanics are going to be involved in it. So, I think there's sort of a common misconception out there right now that, SPACs are, maybe less regulated or sort of easier in certain senses. And I think they are, they have their own advantages and disadvantages. Certainly they are I think they're a faster timeline, certainly, but that brings along with it, a lot of quick ramp up. And they also involve an entire merger transaction, which, I think people sometimes forget too. So for us, like I said, we were always ultimately intent upon going public. It was just sort of a question of when and how, but we were well set up, I think, to take the steps that we needed to pretty quickly. So, that we sort of really kicked things off in earnest over the summer, leading up to the signing of our merger agreement at the end of September. So it was, I think there's a lot of work sort of in that immediate time span. And ultimately, I think, what you have to be prepared for with a SPAC is that it's a compressed timeline. It's just, you're doing ultimately all the same things from a, preparation standpoint to be public, but you're doing it in 6 months instead of, 12 to 18 months.
I'm sure quite a few sleepless nights for you and folks. Team.
Yeah. We grew quickly. I mean, your question about sort of adding hires, we definitely, my team, grew very quickly.
Well, I mean, just to double click on what were some of, sorry, Brittany, go ahead.
No, I was going to say, just to build on the timeline piece, I think this is one of the things that sometimes there's a little bit of confusion on in the market from the outside in. And the reality is, the regular way IPO process and the SPAC process can be done in similar timeframes, like literally up into a couple weeks apart. And so the actual execution process is not all that different. But I think what's happened is that the SPAC market has enabled a wider aperture of companies to potentially get public earlier or maybe sooner in their journey. And so the companies haven't necessarily built out, as many of the processes or et cetera that you might want to have, because we've had this phenomenon over the last several years where tech companies have been waiting longer and longer on average to get public. But one of the things that surprises me the most when I'm having conversations is, with companies, is that they want to pursue a SPAC path, but then they don't have audits. And so it's not really you're going to need audits done to be in a position to file an S-4, which is the document that you're going to need with a SPAC. And so if a SPAC is something that you all are at all considering, getting a head start on the audits is a good early stage thing to get moving on, because you're going to need audits, again, if you're going to go SPAC or direct list or go regular way IPO. And so it gives you the optionality to maybe pursue the SPAC path. You don't necessarily have to have the audits completely done when you start that process, but you are going to need them done, but around the time that you would announce such a transaction.
Yeah, I agree. I mean, having an incredibly strong finance team was definitely key to us being able to do this successfully.
At the same time, I mean, a 6-7 month timeline from, you talked about Soleil starting to really think about the SPAC in the summer. I mean, it's a pretty impressive speed at which you moved. And I would say, and Brittany, I'd love to get your thoughts on this. In my portfolio and in the index portfolio, a lot of times people are thinking, outside in, maybe this is an 18-month process, maybe it's a 12-month process, but that obviously you've shown that it can be an even shorter process. Brittany, I'm curious how you think about kind of that timeline. And this is, I think, one of the big, it sounds like, fallacies of the SPAC, which is you can move so much faster. But I think what you're saying is, you can move fast in any of these directions, and maybe that entire timeline has compressed. But maybe you could double click on what you see as kind of the average timeline or some factors in that timeline to help people think about it?
Yeah, the actual execution is only a couple weeks apart between the two, and so there's not any material difference there. And so I think some of it depends on what we're considering as the timeline, because oftentimes companies think about preparation as part of the timeline, whereas the actual execution is not all that different. For example, I recently did an IPO in 4 months, start to finish. And that's the actual execution from org meeting to writing the S1, getting on file to pricing the IPO. And so that was an incredibly quick process. Now, that's not to say that the company wasn't thinking about the IPO before and starting to build out its team and getting its CFO in place and getting those audits done and doing practice earnings calls, but the execution can be pretty short. And the same thing would be true for direct listing. In the current environment, one of the biggest unknowns is just the SEC process because they're so busy, like everyone else in the ecosystem. Once you submit the document, there's not full clarity on exactly when you're going to get comments back.
And Brittany, just because you mentioned direct listings, and this is a topic that's gotten a lot of play in Silicon Valley. Bill Gurley has been so vocal about his support behind that method, and yet at the same time, it feels like we're seeing fewer companies pursue that path. Just curious if you can give some color on whether that's still part of the conversation you're having with companies, and whether you think this is something that's still a really attractive path for many companies.
The direct listings here to stay. I think the numbers have been impacted historically. There's only been handfuls of direct listings to this point, but in large part because you've not been able to do a direct listing with a primary capital raise, and that's evolving. And there's conversations to evolve that, but that's precluded a number of companies from thinking that they've wanted to go down that path, because if you want some level of primary capital, you've needed to go the IPO route, or now you can do SPACs and you can get more capital for the business as well. But I would suspect, and this is one of the debates that we have as well, of are SPACs here to stay or not? I think they're all here to stay. And these are all just going to be different flavors of how you can get public. And there's probably going to be continued innovation on each one of these paths of, how you enter orders and how big is the SPAC relative to the company, relative to the pipe? Because when you do a SPAC, you often do a pipe. And so there's going to be different gears that we turn on each of these paths, but I think you're going to see more of each one of the flavors.
Great. And so, having lived through this very recently, I think one of the questions I had going into this was, you're on the other side of a very successful transaction here. How did the process live up to your expectations, your team's expectations? And were there any big surprises that kind of caught you off guard as you were going through it?
I don't think there were any big surprises, but I think, one of the things that certainly became clear was how critical it was to sort of have a realistic sense of the timeline and sort of build out a calendar and what that would look like, and build in, to Brittany's point, sort of the potential variability around the SEC response process, and then making sure that all the various constituencies involved understood what was happening. I think again, at the time that we were doing this, there wasn't quite the level of, I think, knowledge or understanding of SPACs as there is today, and so making sure that our employee base understood, and that our board and founders and investors really understood what was happening. I think another thing that companies often don't think about is that if you're coming into a SPAC and as a venture-backed company, as we were, your corporate documents aren't necessarily set up for a SPAC. So, you can sort of end up in a place where you're having to relook at them and figure out, did these documents, how should they be interpreted in the context of a SPAC? Because, historically, they haven't contemplated a SPAC. They've sort of been, keyed to IPOs in terms of liquidation preferences and stock conversions. So, figuring out what you need to do sort of just even from a, corporate kind of basic documentation standpoint, and making sure the investors sort of are all aligned about what's going to happen as you go through this process. was something that, I think would be easy to miss if you didn't have sort of strong counsel leading you along the way.
Okay, so strong counsel is the key, and I think Brittany mentioned a strong financial leader. Maybe you both mentioned who can kind of shepherd that side of the process as well.
Yeah, I think that,
sorry.
identifying the right advisors, both, from a sort of outside counsel perspective, and then, the banks, and figuring out sort of the right key advisors who can really assist you is critical too.
Well, and there's so many people that are involved at different parts of the way, which I'm sure has been your experience, because you have the SPAC process of identifying who it is the SPAC that you want to work with if you're the company. And then there's going to market with the pipe, where other people get introduced into the mix. And there's usually another set of bankers and lawyers and folks that come to the table for that to ultimately get the deal announced. And I think you're absolutely right on the documentation. This has been one of the things that has thrown some of us for a loop as you're just trying to contemplate what do these the historical documents mean in context of the new world when they didn't think about these options.
Yeah.
Brittany, I mean, we talked earlier about the tri-track, and so you've lived through this recently, but it sounds like a huge amount of time for a management team to spend evaluating these different options, pursuing these different options, lining up the right advisors. What's your sense for how a management team that might be on the verge of doing this should think about their own time management as they head into a process like this? And Brittany, whether from your perspective, seeing lots of companies, or Soleil from your perspective, having actually done it?
Yeah, I think lining up a really good team from the outset is a first step. And so that's both an internal team. What are the resources internally that you're going to put to work on this? Because you probably don't want the whole company involved. There's a company to run. There's a lot to do. You're in a high growth environment. And so there's, you don't want to have execution missteps because you're in a process, but then finding the right advisors, so that outside legal counsel, that's bankers to also help. And then I think being clear as a collective working team on what are the objectives up front and what is it that you're ultimately solving for. Because, there's different outcomes, there's different max points. And so, I think having a good process design at the outset. So maybe you don't call 100 SPACs and you decide that you're going to call 2 SPACs, or you're having conversations with 2 SPACs that you're already in conversation with, and that's going to be the path that you think about. And if that doesn't work, you're going to use that marketing to get public. And so, I think there's a lot that can be done in process design coming out of the gate.
Great. And one of the things you said earlier was that you think SPACs are here to stay. So you've already asked, I think, the question that a lot of people are thinking about. I actually was just reading a quote from The Economist just last week saying SPAC trend is a giant experiment, and I guess that certainly is what it feels like on my end at this point. But I'm curious what your view is. How is the experiment working out if you believe in that framework that they've suggested?
I don't think it's a giant experiment. And look, SPACs are not new. They're just more popular, and there's greater volumes that have come to the market in recent history. But there's been many successful executed SPACs before. There will be continued execution and good companies that go public via SPACs today. Maybe it's not all companies, but look, every company that goes public doesn't have, a great entree in the public world either. And so maybe the volumes aren't the same as where we are today, but as an asset class, I think it's here to stay.
Great. Okay, I wanted to ask maybe a wrap-up question for each of you. So the first, Soleil, in your direction would be, what advice would you have for companies that are, maybe a year behind you in terms of their decision-making process? Someone considering a SPAC, what advice would you give them?
I think, some of it is what Brittany already said, which is, identifying sort of the goals and rationale of the transaction and figuring out, is a SPAC the right choice for you, and why are you doing it that way? And then, if it is, and you're sort of headed down that path, it's really making sure you understand, I think, each of the sort of milestones and kind of what in particular the post-closing period is going to look like. I think there's you know, a lot of misunderstandings about, you know, what sort of how the post-closing of a SPAC compares to, you know, an IPO, and just some of the technicalities around you know, what you can do from an SEC perspective and sort of how you have to deal with issuances is a little bit different. So making sure you understand that, making sure that you have really experienced counsel that you trust, both I think at the, you know, from a legal perspective, and then again, you know, with your banks who can help shepherd you through the process. And then I think, you know, ensuring that you sort of set expectations appropriately for everybody involved, whether that's, you know, your board and founders or investors or employees, you know, helping people understand, you know, what it means to go through a SPAC, what the timelines are going to be and where the variability is in that timeline, you know, around whether it's around the SEC or the diligence process, you know, which is quite extensive on the front end. I really think it's kind of setting out that overall timeline and understanding each of the pieces along the way.
Great advice, and I'm sure will be well received. Brittany, anything you would add to that? I have one more question for you, but any other advice you'd offer to a founder or a management team that's kind of on the cusp of making this decision?
Get a lot of perspectives. There's a lot of news in social media on different paths, and I think it's good to gather different perspectives and form your own point of view of what could make sense for your company, depending on what the objectives are that you're solving for. They all can be good paths, and it's really about what makes sense for you. And I think just having good organization at the outset, as we talked about, you don't want to be stuck in a deal for 2 years in the making. There's a lot to do at the company, and so figuring out clear leaders of work streams and who's on point for what, and I think is one of those key things to making sure things run efficiently and smoothly, and so you're just not stuck with the company resources on something that's not actually running the company. It's an important step in the company's journey into liquidity, to capitalization, et cetera, and telling the story, but it is just part of an overall journey. It's not an end, and going public is not an end goal.
As I'm sure Soleil can attest to at this point.
Yeah, you keep waiting for the point where it's going to slow down.
Started.
Yeah.
All right, Brittany, last question for you.
And I think, by the way, on that, Mark, yeah, I was going to say on that, it's like the other thing I think sometimes is people don't realize that you are a public company too. And so like when you stare yourself and the company in the eye, are you ready to be a public company for any one of these paths? And you know, how comfortable are you getting on earnings calls and having a projection model and having visibility? Because the one thing we do know is most often long-term sustainable value is created over the long term. And so this is just one step in the journey. And so it's that repeatability and the predictability and getting on and being able to beat and raise coming out of the gate that is most often going to create the best results for the duration. And so are you ready to do that? Or can you get ready if you're not ready to be in a position to do that? Because the thing that I hear right now is, oh, the markets are so good. I got to rush and get public. And yes, the markets are good, and it could make sense to take advantage of these conditions. But the reality is, for good companies, there's always a market. I can't promise that it's going to be when the average trading multiple for a SaaS company is at 14 times, but it still can be a lucrative environment. And so my own personal view is go when you're ready to go, not because of the market dynamic.
Well, you talked about the markets being good, which is certainly something that's on founding teams' minds at the moment as they think about this decision. My last question to you is a prediction, which is, will they stay good? Is this a window that people, you talked about, great companies should go public in spite of market conditions. But I think a lot of people would like your views on the market conditions. Do you think we're, on the verge of some sort of correction here, or do you think, we're at the beginning of something? This is just the beginning.
The million-dollar question, and if I had an answer, well, goodness, look, our equity markets are at all-time highs. Certainly in technology, multiples are at highs. We've seen a little bit more volatility recently, and I think a lot of that's been driven less specific to tech, but more of a rotation out of tech, just as other parts of the economy start to open in a post-COVID world. And so you've seen companies be impacted in their valuation as part of that. But I don't think we're in for a mass revision anytime soon. And you can never say never, and maybe there's another black swan event, or there's different variants of COVID, and the vaccine that we have isn't working, and we go into additional shutdown. But I think we've learned a lot through this pandemic too, where certainly in technology and then software more specifically, the models have proved themselves. The durability is there. If anything, digital transformation has been pulled forward. The ways in which we live and expect to live have fundamentally changed. And so, we all sit at that intersection where our worlds, whether it's healthcare or tech or the blend of both of those, we are the frontier of how the world is going to be living and working. And so I think that all leads itself to these sectors are going to be high growth and have really strong tailwinds for a long time, which I think investors are looking at that and saying, okay, what of these stories can compound value for many years, not just this year? And how do I look at those longer term models and look at that to justify, okay, what might be I willing to pay for a company like this today?
Great. Brittany, thank you so much. Soleil, thank you so much. Really interesting conversation. And I hope you both have a lovely day.
Thank you. You too.
Thank you so much.